Hi, David. Thanks for joining us today. It was
Hi, Alan.
good to see you. How you doing?
Yeah, fine, thank you. Fine, enjoying the nice sunny weather that we've got up in Birmingham. It's the first time for about 5 weeks, I think. It's
Well,
not,
First time in about 5 years, I think, is it?
yeah,
More like that.
yeah.
Good stuff. Good stuff. Well, no, thanks for joining us. Just wanted to have a quick chat today about the new Smithfield Lofts development you guys have just launched, which sounds like it's going incredibly well. Just wondered if you could just tell us a little bit more about Smithfield Lofts, if that's okay. And then we've got a few questions from some of our clients who just want to learn a little bit more about who Prosperity are. We've obviously worked together for a long time, but it'd be great to hear from you guys what you've been up to over the past few years and what you've got maybe in the pipeline for the future. And then a few people wanted to know a little bit more about why Birmingham, because I think one of the questions that people have is it too late to be investing in Birmingham? Has Birmingham already had the growth? Personally, I think there's still a lot going on, but it'd be great to hear from you, being based there, what's going on.
Right.
So first of all, yeah, if you could tell us a bit about Smithfield Lofts, that would be fantastic.
Sure. Well, Birmingham is undoubtedly thriving. I live about 20 miles from Birmingham, but I work in Birmingham city centre every day, and I have done now since 2014, and I've seen a remarkable change in the dynamic of the city. And it's been fascinating to see. I do joke that I first went to Birmingham as a 30-year-old for a job interview, and I couldn't get out of the city fast enough. It was a godforsaken place, but that is getting on for 30 years ago now, and I'm pleased to say that you don't feel like that when you come to Birmingham now. It's really a great place. And Prosperity, we'll talk a bit more about Prosperity in a few minutes, but Prosperity have been located in Birmingham since their inception, and so we know the city well. And so there's been a major focus for us in building property in Birmingham. And the site that we acquired literally as long ago as 2016 in the Digbeth area is where Smithfield Lofts is now located. So it's very close to where HS2 railway station will be. And it's literally 7 minutes walk from that station.
Fantastic.
And a lot of the dynamism that I've referred to is centered around Digbeth and the at the moment it really is a rundown area. There's been a lot of demolition, but the Birmingham City Council have made it very clear that what they want to do is to move Birmingham city centre southwards towards where this HS2 railway station will be.
That's where you make your money, isn't it? As an investor, it's like if you look at it from a property point of view, if you buy a property that's run down, you're likely to be able to make more profit on that than something that's already had the work done. The same when you're looking at a city. If you buy in the area that's already had the regeneration, you've kind of missed out on a bit of the growth. But if you're buying in this area that's getting billions of pounds spending on it, and you get in at the beginning, that's when you can benefit from it. So that's great.
We've managed to acquire quite a large parcels of land adjacent to each other in what is called Smithfield Markets. Now, Smithfield Markets was where the big wholesale market was founded over 100 years ago in Birmingham, and was back then when people used to bring their cattle into a city centre market and trade them. It was a thriving area, but of course we've had an industrial revolution and changes in the way things happen in commerce, so that's why there's been a decline in the area up until recently. But we're there. We've got a project. The project that we've launched initially will be a phase of 151 apartments in the tower element, but there will be 3 or 4 parcels of land that will be developed over the next 4 or 5 years. This one will be the first. It will be developed over the next 30 months. And the tower is 22 stories, and will have really super views over the area surrounding Birmingham and of course Birmingham city centre. But it is part of a huge redevelopment that Birmingham City Council has been very heavily committed to. And the largest developer within the area is a company called Lendlease, which is a multinational, global, Australian owned, but obviously a big UK presence as well. And they're primarily building out the rest of that site, putting offices, apartments, retail, public transport facilities, etc., to really merge into where HS2 will ultimately find itself.
Fantastic. I mean, I've obviously read some of the literature as to what's going in there, but and we as a company work primarily with investors. But are you finding that is it mainly investors that are looking to buy in the area, or is it a mixture of owner occupiers as well because of the facilities?
Okay, the principle that we employ when we market our sites, fundamentally, we're trying to appeal to the investor market, and we build the majority of our stuff off plan with a 2-year to 2.5-year window to completion. So we're naturally appealing to investors because it's difficult to appeal to the owner occupier when they've got a 30-month track to completion. They're not really going to be aspiring to buying something that's that far down the road. So what we do is, in our first launches, we tend to focus almost exclusively on investors, and then with the subsequent launches, with the later phases, we'll be saving some back for owner occupiers, so that we can get a nice mix of owner occupiers and investors on the site, which always enhances the overall quality of the site in the long term, I think.
Yeah, of course. And I guess if it's not the whole development that's all been sold to investors, when it comes to completion and you're looking for tenants, if part of the building's been sold to owner occupiers anyway, there's only a finite number of units available for renters, which obviously is going to have a positive impact on rents over time.
Yeah.
And I saw obviously Smithfields itself, and that there's a lot going on there. So from a point of view, from a resident, it's great. You can have everything on your doorstep. You're close, like you said, to HS2. So anybody that's commuting around the UK, it's great from a transport link point of view. But the actual development itself, it looks like there's some more. I mean, if you can have higher than 5-star facilities, it looks like there's some incredible facilities. Tell us a bit more about that, if that's okay.
Yeah, I think this is again an example of the sea change of Birmingham. 5 years ago, and we've built a number of sites in Birmingham. 5 years ago, we wouldn't have offered this type of project to the market, but the market is now demanding it. So what we're seeing is, with the advent of HS2, with the redevelopment, and as I used the word a few times, but the dynamism of Birmingham city centre now, which has been founded out of the growth in the financial services community, which is migrating from London to a large extent. These changes are bringing a higher earning tenant to the city. These people are migrating from London. They've been used to having nice apartments, perhaps overlooking the Thames, Canary Wharf type of area. They're looking for higher level apartments than we might have provided 5 years ago. So had we come to the market with this particular project 5 years ago, we probably wouldn't have sold them as a compelling investment or let them out, because they'd have been too expensive. But now we're finding we're getting in a high level, 100,000 a year managers coming in, looking for something that's a bit special. So for the very first time in Birmingham, we're offering 24-hour concierge, a gym, cinema, like roof garden, casual areas, socializing areas, workspace within the public areas for people to just work from home, and social interplay, and this has become very attractive in Birmingham, but only recently. And so we're mirroring what you can acquire in London and indeed in Manchester, but as I say, it's a completely new world for Birmingham, and it just augurs well for the continued development of the city, I think.
Yeah, absolutely. And it sounds like it's really it's sort of designed with the end user in mind as well, with the creation of a community you mentioned there, with the social spaces, the workspaces, places for people to actually congregate and meet their neighbors and create those friendships and relationships that maybe in the past, if it's just a block of apartments. I mean, I've lived in apartments where you often don't even meet your neighbors. You maybe bump into them in the lift, but there's never any reason for people to get together. So things like that, I guess, are going to have a positive impact on occupancy rates. If you've gone there and there's a nice community and you've got all the facilities and you're in a great location and you've got everything on your doorstep, there's not really a huge reason for you to ever leave that property. No. So, I suspect it's probably going to have there's going to be very low availability of properties to rent or buy in buildings like this in the future.
Yeah, I think so.
It's great to hear that. And one thing you mentioned there about a lot of companies relocating from London to Birmingham. Why do you think that is? What's your sort of take on that?
It's been quite a long-term project, and I think Birmingham City Council should be applauded for the efforts they've employed in it literally over the last 15 years. And as I alluded to earlier, there's been no secret of the fact that Birmingham was a pretty depressed city 25 years ago. It grew along with Coventry largely out of the motor industry and the successes in the motor industry that we had, after the Industrial Revolution. But of course, the motor industry went into decline in the UK, and Birmingham suffered more than most, I think, as a result of that. So the council decided, I think, let's try and reinvent Birmingham, because they'd certainly lost the impetus of the city as the second city, which it always was and is as in terms of size. They'd lost that impetus to Manchester and Liverpool. So let's see what we can do. And they focused on the further education facilities in Birmingham, and they really concentrated on building Aston University, Birmingham University, a number of the colleges, and the university sector of Birmingham now is huge. And the Birmingham has the youngest population of any of the main 6 cities in the UK, and that is because of the university and the further education population that exists there. And the clever thing with that is that these people were coming for 3, 4, 5-year courses, and of course moving from wherever they lived in the UK. But over that period, Birmingham kind of became home. So the natural tendency for somebody is, once they finish work, they don't necessarily they've made their friends, they've made their connections, they've become comfortable in the environment. So if there was employment in that region for them, in that area, they'd be minded to stay. And I think Birmingham City Council then saw this as an opportunity to try and bring employers into the region. This then got backing from central government, with the idea of improving road and rail links to London, and we've got HS2, which was the final part of that jigsaw. And so there's almost a perfect storm here of London being a bit too expensive, a bit too busy. So big employers down in London thinking there are so many incentives for us to move to Birmingham. It's cheaper. It's only, even now, it's only an hour and 20 minutes away by train, soon to be 48 minutes by train. We can get employees there who are well educated, settled, and happy to be paid 25% less or more than they are in London. What's not to like about moving our H quarters there? And so over the last few years, in preparation for this change, we've seen HSBC, Morgan Stanley, Deutsche Bank, KPMG, the Inland Revenue all moved their main UK headquarters into central Birmingham. And so this has brought with it a big increase in the population, and big increase in money spend, because we've got new people here with good jobs, all looking for work, but and also for accommodation. And the type of accommodation that they want isn't 5 miles out. Young people want to be able to walk to work or get on a tram and go to work, and be close to the social facilities that might exist around work. And so it really has become a very attractive place to live for that reason. And you can see everything improving in Birmingham, the restaurants, the bars, the hotels, facilitating this change.
Well, the knock on for the economy by having, I mean, these are major employers as well. It's not like it's there's some cities that boast about how many startups they have, which is great, but we know startups inevitably, a huge chunk of them do fail. When you've got major institutions like HSBC, Deutsche Bank, Inland Revenue, I mean, they're not going anywhere. No. And like you said, the types of money they're paying people, these people can then go and spend the money in the local shops, restaurants, bars, coffee shops, etc. Those businesses then feel the benefit. They can grow, they can improve their
So it helps the
facilities.
startups.
And then it helps the
The
startups,
cafe
exactly.
is, so
Exactly. So it's really, it's like a really nice economic ecosystem that's being created. So it's only going to boast positive things for the future, isn't it? It's a it's an upward spiral. So from a sort of a long-term point of view, then Birmingham, it seems like it's still a really strong proposition. We're still at a good time.
And we, as I say, we've been building in Birmingham for a number of years, and for sure prices have risen, but they're still less than they are in Manchester. And I'm incidentally, I'm not Birmingham born and bred. Hopefully you can recognise that from my voice. But it's I come from London, so I'm not married to Birmingham. But Birmingham has a lot to offer, and really from a geographical standpoint, it's got more to offer than Manchester.
Well, arguably it beats anywhere in the country, doesn't it? Because it's right in the center of everything.
Exactly.
Train, airport can get you all over the world as well now.
So the airport is, yes, absolutely, and it's very easy and very accessible, and all these new connections that are taking place around the advent of HS2 mean it's going to become even more accessible. We're going to have a tramway around Birmingham. We're already 2 phases into a 5-phase tramway system, which is going to connect to the airport and up to Wolverhampton and some of the other satellite cities and around the city centre itself. The city centre part is already running and very effective. So yeah, it's super
exciting time. So it isn't even just Birmingham that's going to feel the positive impact. It's all the surrounding towns and cities as well. So a very, very exciting time. So jumping on from, so Smithfield, we know it sounds like a fantastic opportunity in that location. Birmingham is, we know it's a great time to be investing in Birmingham. Why should investors work with Prosperity? For those who don't know Prosperity, if you could give us a brief backstory and what's ahead, that would be great.
Sure. Yeah. And Prosperity have been in business now since 2009. So we've got quite a track record of delivering property. The mainstay of what we did at outset was to redevelop existing buildings and convert offices and warehouses into residential. And we did it in a quite modest way. We did 10 unit sites, 20 unit sites. And that we experienced all the challenges that you do when starting a startup. And they were exciting times. We were fortunate that we were doing it in a boom period for property, and that helped us. But what we realize now, looking back, is there was a bit of a risk involved in all of that. We were pounding the drums of how good we were, but really we didn't have a track record of success. We didn't have a financial infrastructure that really we could tell everyone how strong we were, and we didn't have a track record. And I'm very grateful for the support that clients and advisors gave us back then in buying our products, and I'm glad we came up with the goods. But today we've delivered 4,500 properties around the UK, mainly apartments, but also houses as well. I think that's across 44 sites. So there's great diversity in what we've produced. We are now our own developer, so we produce our own product in the majority of cases, and a lot of it is new build. So we're very experienced, we're financially sophisticated in the way we fund our projects. We have a very strong equity base. So that sets us apart, I think, from a number of the other companies that are out there. The other thing that's really quite unique about us is the way we, in the off-plan market, the way we help clients to fund their first purchase. And that is because let us say we're building something over 24 months. We allow clients to build up their deposit as an investor whilst we build the property for them. So it's a monthly installment way of accumulating your deposit. So typically on a £250,000 property, you would pay us a 5% deposit at outset. That's £12,500. that would secure the property, secure the price. And then we would ask you to pay us a monthly amount over the build process, let's say 24 months, which would amount to probably about £2,500 a month on a £250,000 property. And this gives somebody, perhaps, let's say, a newbie to investment, the opportunity to invest now, but not commit a huge amount of their savings, and to then pay from drawing down from their savings as they see the building coming out of the ground, as they build confidence about the whole concept of investing in property for the first time. And it just means that we're working in partnership with them. It gives us a long period to talk to them about how to structure their purchase, how to think about mortgages, what to do when it comes to tenancy, how to buy the company, either buying it individually or through a limited company. And it just means we can handhold the client through the whole process. And even if clients have significant amounts of capital, the sophisticated investor amongst us realizes it's much better to keep the money in their own bank account for as long as possible. So this deployment of capital progressively through the build process engineers a lot of the risk out of it. Really quite a compelling argument for an investor. It means they don't have to deploy a large amount of capital at outset, but they've bought the property, they've secured it, and the price of that property can then rise without much money being committed. So if you work out the rate of return on capital deployed, it really can be quite attractive. If the property grows quite modestly, let's say 5% per annum, so the return on capital, if all you've deployed is 30% in uniform stages over 24 months, is double-digit returns. And it's very attractive. So I think that sets us apart. We are then a one-stop shop for the property journey as well. So in-house we have the lettings agency, we can provide mortgage facilities, we can provide advice on tax planning and how to buy the property, whether a limited company is right. These aspects are all things that will appeal to an investor, sophisticated or new.
Fantastic. I mean, we've had examples of this where clients have bought properties and seen significant growth. I mean, some of them have made incredible return on investment during these build periods. But what's interesting is with the payment plan, what we're finding now, a few of our clients who their properties have maybe completed and they're starting to generate income, instead of taking that income and putting it into their savings account, they're using it towards one of these other investments. So they're using the profit from one property to buy them another property, and that's when your return gets sky high. You're not even using your own cash in theory, are you? Your investment's buying you another investment. So I mean, as far as I'm aware, you're the only developer in the UK that offers this payment plan, which is, I guess, why it makes things very attractive from a buying point of view. In terms of there's
no compunction to use that payment plan. If somebody wants to pay us quarterly, they can.
They
want to pay us a big lump sum, again, they can, but we don't ask for it. And people sometimes then say, can we have a discount if we do? And we can talk about it, but it won't be significant because our whole model is based on the fact that we expect the money to come in monthly or quarterly, and it suits us, and we've got the funding in place to manage the rest of the project. So.
And the properties seem that they're well priced anyway. Looking at whenever you launch projects, when we obviously do a research, we look at the comparables within the area. They always come in under when first launch goes out. So and I think from our point of view, what we like is that some developers, you can see they try and strip all the meat off the bone. They try and squeeze all the profit out of it, which is why we don't tend to work with those developers. And what we like about you guys is that you appreciate if someone's buying this as an investment, they need to make a profit. They need to make a return, and if they do, they're going to come back to you. And which is why I guess whenever you launch properties, they do tend to sell quite quickly, which we've experienced. Sometimes our clients have sadly missed out. I remember the mailbox development you had, was sold out in a matter of hours, I think it was, or something like that. So with just to finalize then, just to sort of bring it back then to Smithfield Lofts, so launch has already happened. Some sales have already happened, or a significant amount of sales have already happened, it seems. What would you say to somebody that's sort of considering, shall I go for this? Shall I look, what are the sort of the top key points as to why somebody should go for this over something else, in your opinion?
I think sometimes you you launch a property or you launch a project and you think this is actually just a really good time. And I think where we're at the moment in the economic cycle, here we are today, we're here trying to advise our clients, aren't we? But at the end of the day, we want them to buy property, we want to sell them something, don't we? So it's all very well, sometimes we can make it sound like everything's perfect.
Yeah.
And we have to realize that that's not the case. And if we're advisors, we should be giving clients the full overview. And there's no doubt at the moment, as a result of a number of extraordinary events over the last 5 years, like a pandemic and like a war involving a superpower and Brexit, these things have all had an impact on the worldwide macroeconomic life that we have. And we've got high inflation and high interest rates, and that's spun out of what's happened in world markets. We had interest rates too low, they were suppressed much longer than they should have been because of the pandemic, and as a result, in an effort to suppress the flow of money post the pandemic, interest rates have been raised significantly all over the world. And it's had a bit of a knee-jerk reaction for everybody, and we've seen interest rates being raised in the mortgage market, and that has tempered and slowed the property market. But I think we're at the top of that cycle. That's certainly much more clever people than me that I know in the city. They're all telling me that we're pretty much there now, and the trend is definitely downwards. But it's not going to race downwards, and it's not going to be 0.5% base rate again. But we can see interest rates, I think, gradually moving back down to a more typical median rate of 3 or 4% over the next few years, and that's good. But meantime, we still have to sell property, and I think just at the moment, the fact that Birmingham is still thriving, capital values are still rising, the city is growing irrespective of all these negative influences worldwide, means that it's a perfect time now to be buying something that you don't have to pay for today. Why not reserve something today that you're going to have to pay for fully in 2.5 years' time? Start paying a nice, comfortable amount of deposit money in a monthly installment plan. And whilst you're doing that, see the interest rates trend lower to the time when you are ready to complete, and you can then buy really quite attractive mortgages again, with lower rates, maybe 3.5% for 5 years. You'll have had capital growth over 2 years. It just seems a perfect time to be buying Birmingham and buying off-plan Birmingham.
I have to agree with you.
My view, and I think, it's without making a secret of it. We're selling this first phase in phases, and we've sold over 45 units in a week, and I think that is compelling proof that the general market sees this and just says this is really a very good idea at the moment. And
absolutely. I mean, you mentioned there we have to still sell properties. I would go one step further. You have to still build properties as a developer. The UK is fundamentally hugely undersupplied. This is no secret. The government always have their building targets, which they never meet. And look, you said you started working on this project, what, 2016? Did you?
We bought it, and we've been trying to get planning permission.
Exactly. Look at that. 7 years from when you buy the land to when you can get the spades in the ground and start selling it. That's one of the major issues in the UK. It takes such a long time to get planning. So, the issue regarding building more properties, it's not helped by that. But from an investment point of view, it's kind of positive, because it means there's not a stock being flooded to the market all at the same time. It's very limited with the number of new developments that's launched, purely because the government and the local councils aren't issuing planning permission very quickly. So
the biggest driver to capital growth in any asset, whether it's property or or stocks or shares is demand and supply, and that's if you've got an undersupply and a high demand, it's bound to lead to capital appreciation, isn't it?
Agreed. And that's why I love property. Not get rich quick, but you will get rich.
Yeah.
If you buy it and hold it. Well, thank you so much, David. Honestly, always a pleasure speaking to you. Really appreciate all of that. Some great points there about why Birmingham, why you guys as a developer. Obviously, that we're keen advocates of you guys, but also the actual development itself and the location sounds like an incredible opportunity for anyone that can afford to get in. So thank you for all of that. And I look forward to getting up there soon and seeing the progress on the build, seeing the site.
You're welcome anytime.
Great to see you. Thank you so much, David. All right, speak to you soon. Take care. Bye.